This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on December the 19th, 2014. Harold's website, rarecoloreddiamonds.com. rarecoloreddiamonds.com to connect with Harold. Speak with him personally and privately at 1-800-432-1022. Harold's auction website is hsfineauctions.com, and we will let you know when the next auction is. Don't forget, our radio show runs on your favorite radio station. Like 630 Ched in Edmonton, we're on today prior to the Oiler game against the Dallas Stars. Good luck to our Oilers. We also have streaming shows via Harold's websites, HESradio.com and rarecoloreddiamonds.com. If you ever miss a radio show, they're there streaming, and we have a podcast through iTunes. Type in The World Financial Report on Radio, and you will find us there. Our featured Diamond of the Week from rarecoloreddiamonds.com, we'll talk more about diamonds in the second half of the show, is a 1.01 carat radiant cut fancy yellow internally flawless. And we have some outstanding, this is information you must read, and we'll talk about it later in the show. Dazzling returns from the Wall Street Journal and diamonds. Timeless gems in a changing world. Two articles that are must-reads, and we'll talk about diamonds in the second half of the show. Now, as we start today's show, the oil market pulling back further throughout the week. It's around 55 right now. The loonie at 86. Russia pumped $16 billion into the banking sector overnight. They raised interest rates during the week 17% to obviously boost the ruble. Did not work. What's a hot commodity right now in Russia? Buckwheat. I know, it's crazy. We have a story about it in our free weekly newsletter. You can get that from Harold. Connect with him at rarecoloreddiamonds.com as well. Russians are buying cheese the way some people purchased marijuana in the 80s in Brooklyn. Give you an idea of how crazy things are in Russia right now. We spoke last week about runs on ATMs, people going to ATMs and taking out all the money they possibly could. More chaos in Greece. Greece possibly leaving the euro, depending on what happens with elections coming up. As well, Harold's son Jonathan sent us a story this morning. Switzerland, the national bank, will cut interest rate to minus 0.25%. I know Harold will talk about that momentarily. The Fed keeping interest rates at record lows. And in the United States, Americans are 40% poorer than they were before the Great Recession. Food stamp benefits exceeding $46 million for 37 straight months. 1 in 5 millennials live in poverty. We also have ISIS slaughtering 150 females in Iraq for refusing to marry them. Very sickening. Cuba. Well, it looks like the U.S. President Obama has decided he wants to normalize relations between the two nations. We'll see how that comes out. And probably one of the strangest stories of the week. Sony Pictures canceled the movie The Interview. That's a movie with Canadian Seth Rogen. And you know, it's absolutely mind-boggling to me that you have these hackers, and it seems to be based, Harold, out of North Korea, and they can stop a movie being shown in the United States. What is next? The water supply, the power grid. Oh, we don't like LeBron James, or we don't like so-and-so. We don't like Aaron Rodgers playing for the Packers. No, if he plays, we're going to have a terrorist attack. This is absolutely mind-boggling to me. The United States has not responded, but it goes to show how weak that the United States is with their current president, Barack Obama, Harold.
How crazy is that, Randy? You know, the thing is that there's two different ways of looking at that situation. Number one is to say, listen, they were able to hack into Sony and everybody else that they've been able to hack into. They did a lot of damage. They really caused some real problems by releasing emails that top executives at Sony made about certain actors and actresses and really caused an awful lot of problems. But what they did actually threaten to do, which is concerning, is to actually prompt a 9/11 style terrorist attack on movie theaters if they show these movies. So do you throw caution to the wind, and do you say, you know, it isn't worth it to take the risk? Because let's face it, if they could hack into Sony's, you know, computer systems, maybe they can do what they say they're going to do, and is it worth the risk to do it? On the other hand, are they setting precedents? Are they saying that exactly what you said? You know, are they going to run scared every time there's a threat made to them? So I'm shocked that this has actually happened. I can understand them, you know, throwing caution to the wind and saying it's not worth the risk to put this movie on, but I think it is going to set up precedent for the future, and they could do whatever they want. So it's a frightening situation. In fact, all of the analogies that you gave at the beginning of the show today, Randy, are absolutely frightening. You know, what's happening in the world today is not conducive to what you're seeing in the financial pages. You know, the fact that oil prices are dropping may make the consumer happy, but look what it's doing all over the world. It's putting people out of work. In actual fact, in Canada, people are being let go from the oil sands because the oil markets have dropped so severely. On top of that, that's happening in South Dakota also. In fact, in South Dakota, where they're extracting oil from shale, it costs them $65 to $75 to do that. The market's trading at $56 right now. How long do you think that they're going to be able to keep this up, selling oil for less than what it's costing them to produce? That's a recipe for going bankrupt. On top of that, that's happening in the metals markets also. The price of metals has dropped below the production cost levels, and many of the mines will shut down because they're not going to produce gold or silver at a loss. And that's happening in oil, it's happening in metals, and it's happening in other areas also. So we're going to see some tremendous repercussions in these markets moving forward. We're starting to see it now. And the fact that oil prices have dropped as much as they have, you know, there's different theories as to why that has happened. Is it OPEC, mainly Saudi Arabia, who produces 30% of the world's oil supply? Are they doing this on purpose? Are they doing it to hurt Russia, to hurt Iran, and to hurt the United States? The chances of that happening is very good. It's very possible that they are doing this to hurt the U.S. and other countries, because they could have cut production 2 weeks ago. And if OPEC, or not OPEC, but if Saudi Arabia would have cut production severely, it would have meant that oil prices would have gone back up probably to the $75 to $80 level short term. But they didn't do that, and it tells me that they have an agenda. They've got another game plan, and there's a reason why they're doing this. And I do believe that they're going to teach the oil producers a lesson, because Saudi Arabia is really the only country that can do that. So, you know, we should be very close to the bottom of this market, but it wouldn't shock me to see oil come down to $50 or even $45 and cause some major hardships. We also saw some major drops in the Dow this week, due to the fact that oil prices have come down, because many of the top stocks in the Dow are oil companies: Exxon, Shell, Mobil, BP. All those companies that were doing so phenomenal all of a sudden are now hurting, and you're going to see a lot of people being let go. It's going to hurt the job market. On top of that, it's going to hurt the stock market. But how in the world, when the market drops for 2 or 3 days in a row severely, then you get a day like Thursday where the market goes up 400 points and there's no bullish news that came out of the marketplace? So, again, we all know that we're living in a world right now where the markets are fixed. At this particular point, there's several markets that are fixed. The oil market is fixed, the metals market is fixed, and so is the stock market. Thing is that you look at a day like Thursday and you scratch your head and say, why in the world would the Dow have gone up 430 points when there was no news that came out whatsoever that warranted the market going up that much? And the reason that the market did go up that much is because people were getting concerned that the oil was, you know, putting a negative spin on the stock market, and the stock market was dropping. If something would have happened and the price of oil would have gone back up, or some bullish news came out to stabilize the market, I could understand it. But no news came out yesterday that warranted the stock market, the Dow Jones in the U.S., going up 430 points. So you just sit there and shake your head. I'm not in the stock market. It doesn't affect me in any way, except I get upset about the fact that we're trading in fixed markets, and that's not the way that the markets are supposed to be. You should be able to go into any market, seeing that they are free markets, and trade whatever you feel is the right thing for you in your portfolio. If you want to be speculative and you want to short the market for apparent reasons, let's face it, the market was plummeting because of oil, so you should be able to profit from that if you're willing to put up the risk capital in which to do it. But people aren't looking to do that right now because the stock market seems to have a mind of its own, and it does not have anything to do with how strong or how weak the U.S. economy is. The middle class is getting killed here. The middle class is in such a bad situation, and it's the middle class that moves the economy. They're the one that pays all the taxes. The rich certainly don't pay taxes. They pay all the taxes. They do all the spending. They're the ones that go to the movies and buy at McDonald's and all that type of thing. And again, that's the part of the equation that's really getting hurt the most. So at this particular point, there's a lot of situations that are happening that we really need to pay attention to. One of them is what's happening in Europe with negative interest rates. What it basically means is they're going to charge you to keep your money in the bank. How ridiculous is that? Keep your money in the bank. They're going to charge you and then they're still going to take your money and loan it out at a much higher rate. So it's really an unbelievable situation to think that this is three actually, that we've seen in the last few months, where it started off in England, last time was Spain, and now it's Switzerland. So the fact is that this is probably going to be the norm. They're going to literally charge us to keep our money in the bank where we think our money is safe, but we now know that it isn't. So I'm thinking that the first quarter of the new year is going to be very volatile. We're going to start to see some situations unfold that are going to be very, very detrimental to the paper markets. And the fact is that, when you look at things realistically without emotion, you're looking at the Canadian Mint and the American Mint that mint silver and gold coins, primarily silver coins, that are very, very profitable for both of those organizations, both came out recently and said that there's not enough physical silver in the marketplace in order for us to mint our coins. Well, how in the world is that possible? Silver has dropped from $50 down to $14.50 that it hit a couple weeks ago, and there's a shortage of silver. That's literally impossible. It's impossible to happen in a real and fair market. And the fact is that they're coming out and saying it right to and publicizing it. We cannot get enough silver to mint our coins, so we're not going to be able to mint as many coins, but the price of silver is dropping. It makes no sense. Economics 101, when they talk about supply and demand, is when demand is high and supply is short, the prices always go up. It's a natural reaction to the marketplace. So how in the world is it different for precious metals? How is it different for silver and gold that's different than any other situation in the world? So, again, those are the type of situations that I'm talking about. They make absolutely no sense. They cannot be defended in any way, except the government can do whatever they want. At this particular point, they are so desperate and in so much trouble. The debt in the United States is beyond anything that we could possibly imagine. And it's getting worse and worse. And the fact is that it's spreading to Europe and to Japan and other parts of the world. We are in no way, shape, or form out of the woods. There's no way in the world that I believe, that I don't believe that gold and silver is going to go tremendously higher. We had an orderly bull market for 11 years, and we did tremendously well. We called the markets beautifully. You could chart the markets. You could basically figure out where the support and resistance levels were, and basically, we predicted the market fairly well for those 11 years, from $250 to gold all the way up to $1,900. We did an excellent job. Then all of a sudden, that one day came when all of a sudden everything reversed, when the metals plummeted because the exchanges where gold and silver are traded raised the margin requirements, made it so expensive to trade gold and silver, and they did this on purpose because they screwed up, because it was the exchanges that have to live under the commodity laws. And the commodity laws are, for every futures contract and every exchange-traded fund that is sold, there has to be the equivalent amount of physical gold and silver in the warehouses in New York to back this up. Well, gold and silver became so popular when they were running. Silver ran to 50 and gold ran to 1900. They were so popular that everybody was buying it, and there was not enough gold and silver in the warehouses, let alone in the world, to basically deliver against these outstanding contracts. So the only thing that they could do, which was totally illegal, but they did it anyways, was raise the margin requirements, force all the speculators out of the marketplace because it was too expensive to trade, and drop the market from 1900 to 1180 in gold, and from $50 to at that point $16.50 in silver. So that's what happened in metals. It had absolutely nothing to do with the bullishness or bearishness of gold and silver. In fact, none of the fundamentals have ever changed for gold and silver. The only thing that has happened is that the governments and the exchanges and the banks that trade in these markets got together and worked out this game plan, and that's what they decided to do. It's criminal, but how in the world are you going to sue, and who are you going to sue over something like this? So bottom line is the orderly bull market that we had back in from 2000 basically to 2011, they destroyed that, and they turned it into a bear market. And again, gold dropped from 1900 to 11 and change. However, if you go back to the charts of the 1970s, when we had a very similar bull market, gold did almost exactly the same thing. It went from $35 all the way up to $200. Not that different from $250 gold up to $1,900. Then it fell all the way in half. Gold went from 200 to 100. It fell 50%. That's not that far off of what's happening right now, where gold went from 1900 to 11 and change that we saw a couple weeks ago, and could probably drop to 1,000, which means that we'll see that 50% retracement. And then what happened back in the 70s is gold and silver just took off. It was not like the bull market that we saw where we could sit back and predict it. It just took off, and in a few months, if you look at the charts on gold in 79 and 80, silver did a straight spike up. It went from $20 to $50 in a matter of a few months, and gold did something similar. So that's what we're anticipating, except on steroids. We think that this next run that will come in gold and silver will catch the short markets. The people that are short the market will catch them with their pants down, basically, and we'll see a run in gold that could basically take gold not only to 2,000, but to prices that we've never dreamed of before. And it's going to be because of shortages, and it's going to be because of inflation. And the fact is that by Russia raising their interest rates to 17%, they did that to strengthen the ruble, to strengthen their currency, just like the U.S. has done on occasions also, and other countries have done. So basically, back in 79 and 80, or in actual fact in 1982, when interest rates went up to 22%, the reason they did that was to strengthen the U.S. dollar and to get out of inflation. Now, the inflation that they have in Russia right now is astronomical. You literally would pay the equivalent of $200 or $300 for a loaf of bread or some eggs. That's how bad things are. When Randy mentioned that the citizens of Russia are going to the ATMs and taking their cash out, they can take all the cash they want, but it's worth 10% of what it used to be worth. Means that, $100 is now worth $10. And that's what's happening in Venezuela, and that's why they have such massive inflation there. I've relayed to you before, my partner's brother had to move out of Venezuela and go to Trinidad in order to be able to survive, and he left most of his cash behind because his $10 million in cash was worth 10% of that. Fortunately, he had most of his wealth in diamonds, and he's in very, very good shape, but he had to move out of Venezuela. So this is what's happening at this point. We're going to see some real fireworks going into next year, and again, I just don't think it's going to be pretty. I would not want to be in the paper markets going into next year. You really need to sit back and look at your portfolio and work things out and be at a comfort level. Take the risk out of your portfolio, and if you want to talk about that, if you want to discuss with me what you may want to do on a very conservative basis, I'm here to help everybody. All you have to do is call, set up an appointment, and I'll spend as much time with you as you need to discuss with you what's happening, what we think is going to happen moving forward, and how we can help you as far as protecting your assets and possibly putting you into a couple investments that can do extremely well. Don't forget, not only has diamonds done extremely well in major articles written this week on diamonds and how well they're doing, especially yellow diamonds, but on top of that, We have a private investment that pays 24% a year, U.S. money. And that is better than any returns that you're going to get in the stock market or in any investment at this particular point, because it's shorter term. It's a 2-year program. We pay 24% a year because it's a very profitable business. We allow our clients to invest with us. It's the rough diamond market, and we're paying in American money, and we pay you every month. You'll get 2% a month deposited directly into your account in U.S. dollars. Some of our clients that are getting $2,000 a month U.S. are now getting 2,300 Canadian when you convert it back. So if that's of interest to you, definitely give us a call and we'll discuss that. If you could make 24% on your money U.S., why in the world would you not want to do that in a secured investment? And we have secured this investment for you by basically putting up extremely rare diamonds into a trust to back up the physical investment. So if you want to learn more about that, it is available to our Canadian clients. And for our American clients, we're paying half of that amount. We're paying 12% a year, not 24% a year. And the major reason we're doing that is because of the weakness of the Canadian dollar. The Canadian dollar is trading right now today at 84 cents against the U.S. dollar. So imagine being able to receive 24% a year in U.S. dollars. It adds another 16% to your returns. It's a phenomenal situation.
Speak with Harold personally and privately about your financial situation. Learn about the opportunities that are available to you to profit and protect the money that you have. We obviously advocate hard assets. Harold's website, rarecoloreddiamonds.com, rarecoloreddiamonds.com. As well, the telephone number, 1-800-432-1022, 1-800-432-1022. Harold's auction website is hsfineauctions.com, and the next auction that we have, we will definitely announce. And coming up a little later in the show, Harold sent me a holiday catalog of diamond rings and diamonds that we'll talk about, and I'm looking on it right now, and it is absolutely stunning. If you would like us to send you this holiday catalog, speak with Harold at rarecoloreddiamonds.com or call 1-800-432-1022. Our featured diamond of the week is a 1.01 carat radiant cut fancy yellow internally flawless. Obviously, here in Alberta, oil is a big deal for us. It makes the province go. And in our newsletter, and I encourage you to get it from Harold, we do have some really strong information on oil. And we have a chart on how much the world's biggest oil producers, how much they're sitting on. And it's a chart from RBC Capital Markets. Halima Croft shows that proven oil reserves for the biggest oil-producing countries around the world obviously do include Canada. Despite Saudi Arabia's huge reserves, RBC writes that a policy of keeping prices low for the prolonged period needed to put U.S. shale producers out of business would essentially eliminate the country's reserves, the money reserves that they have built up. According to the IMF, if oil prices fall to $25 below the fund's 100 to 105 reference case, with no spending adjustment on their part, the Saudi Arabian government reserves will be entirely depleted by 2018, and that's the monetary reserves, not the oil reserves. If the Saudis are screwed by 2018, every other country on the list that relies heavily on oil revenue to balance its budgets probably going to be in trouble as well. So get that information, read it over. It does bode well for higher oil prices in the short term to medium term, even though they brought this market down, because let's face it, they're in a situation where they need to have money to fund their governments the way we do here in Alberta, and they can't let it go on for too long. In the silver section of our newsletter, Michael Lombardi, he's saying silver will smash gold's performance in 2015, a great article. Also in 2014, Silver Eagles, they broke an annual record at over 43 million. Silver Eagles in 2014 have broken the 2013 annual record with a few weeks of sales still left to be counted. As of December 11, the U.S. Mint reported that 43.1 million Silver Eagles have been sold so far in 2014. That compares to 42.7 million in all of 2013, which was the previous all-time record. Investor demand for silver clearly remains strong, and people are taking advantage of the discount prices. As well, Clive Mond giving a silver market update. Gary Christensen, 17 Reasons Why I Trust Silver. And an article that is a must-read. Silver demand for industrial applications forecast to reach nearly 680 million ounces in 2018. Total silver industrial demand is forecast to grow 27%. And that's something that we spoke about on a past show. In China, they are really going full out when it comes to solar technology, not on just major buildings, but even on homes. And that means you're in a situation where a lot of silver is going to be consumed. I encourage you to learn more about investing in hard assets. Get our free weekly newsletter. Get the holiday catalog. We'll talk more about that here shortly. Connect with Harold at rarecoloreddiamonds.com, rarecoloreddiamonds.com, or call 1-800-432-1022. Going to come back and talk about diamonds as the World Financial Report on radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on December the 19th, 2014. Our time is 9:17 Mountain, and this will be our last show prior to Christmas Eve, Christmas Day. We will be taping another show on Christmas Eve for next weekend, and we'll be on every weekend to keep you updated on what's happening in the financial markets. Don't forget, if you ever miss a radio show, they are archived and streaming live on Harold's two websites, HESradio.com and rarecoloreddiamonds.com. Harold does have another website. It's hsfineauctions.com. We'll talk about that momentarily. We do have a podcast for those that have portable devices. We are portable with you. We can go anywhere on your portable device via iTunes. Type in The World Financial Report on radio, and you will find us on a podcast form in iTunes. You can subscribe to the podcast, and we are there for you 24/7. Speak with Harold about investing in hard assets, diamonds, gold, and silver at rarecoloreddiamonds.com. The telephone number 1-800-432-1022, 1-800-432-1022. And Harold will be more than happy to speak to you about what's happening in the world financially, geopolitically. Happy to send out our free weekly newsletter to you. And this week's featured diamond is a 1.01 carat radiant cut, fancy yellow, internally flawless. This is a stunning, stunning diamond. And we do have two articles that are must-read. From the Wall Street Journal, Dazzling Returns. Jewelry is the most portable of investments, and it looks like people are buying into what Harold really started educating us about back in 2005, August of 2005. People are really starting to invest in colored diamonds and jewelry. Also, diamonds, a PDF file report from Bain & Company, Timeless Gems in a Changing World. And we have some auction result information from Christie's and Sotheby's from last week. But definitely speak with Harold about our featured diamond, a 1.01 carat radiant cut, fancy yellow, internally flawless. And one of the things that, Harold, you just sent me, and I'm looking at it right now, that is our holiday catalog, and it is absolutely stunning, this catalog. I would encourage anyone to get it and take a look at it. There is a yellow diamond ring here surrounded by yellow diamonds set in a colorless diamond-encrusted band, and this yellow diamond is heart-shaped. And I was saying to Harold, I think women today, and I know ladies of the past are very proud of the engagement rings or jewelry or diamonds that they have, and so they should be. But as the case is with everything in life, we make improvements. And Harold, I just think the rings and the jewelry they're coming out with today, the styles and the amount of time and effort that go into them and the way they look, the ladies that are getting engaged today and buying jewelry today are so lucky because what we have on offer is simply stunning.
Yeah, I agree with you 100%. You know, as technology gets better and they can find new ways to make jewelry type of thing, they can really come out with some amazing styles. So we would love our clients and listeners to the show to get our catalog and look at it, because there's some beautiful pieces in there. And the fact is that everybody's talking about diamonds as investments now. You know, a lot of companies have cropped up in the last few months or last few years just to get into the diamond business. Not that they know anything about it. Evidently, there's a company out there that held a seminar this week and is trying to push champagne diamonds, which, again, most of these dealers don't know anything about the diamond market. We've been in business for a long time. My partners in business are third-generation diamond miners. They've owned their own mines for 3 generations at this point. So you want to stick with the diamonds that are going to make you the most amount of money. In actual fact, if you get the newsletter this week, the quote of the week was, and this is from David Bennett, the chairman of Sotheby's Jewelry Division for Europe and the Middle East. So he definitely knows his diamonds. He's saying diamonds become colored from exposure to radiation or due to internal inclusions. The intensity of the color is what makes them desirable. Unlike gold, there is no price index for colored diamonds. The widely accepted Rappaport list gives prices per carat for white diamonds, but colored diamond ones are so rare that you cannot fix an index. This doesn't deter buyers, though. Right now, yellow diamonds are the most coveted. David Bennett, chairman of Sotheby's Jewelry Division for Europe and Middle East. So yes, yellow diamonds are setting records at auction again. And in actual fact, we featured a flawless yellow diamond this week because the fact is that flawless yellow diamonds are doing tremendously well, and they're nearly impossible to get. You can get SI1s and SI2 and VS1s and VS2s and VVS1s and VVS2s, but it's very, very difficult to get a yellow flawless diamond, and those are the ones that have track records. In actual fact, they go up by about 15% a year. They never decline in value. Back in 1980, you could have bought a 1-carat yellow flawless diamond for $500. Today, they're around $20,000. They're portable private wealth. With the currency markets doing what they're doing and all the fears in the marketplace, diamonds are an amazing investment. You don't lose money in diamonds. They can increase in value tremendously, but they're not a short-term investment. You want to hold on to them for 10, 15, 20 years, and you're going to see gigantic returns on them. If you buy a diamond and try to sell it in 2 or 3 years, you wasted your time. You're just not going to make any money on them. Diamonds do not trade on exchanges like commodities and stocks do. They trade through auctions and private sales, and that's exactly what we do. All these other companies that are out there now that are pushing diamonds, they don't know about the diamond market. They never created the secondary market that we created. How in the world do you offer a product for sale and not offer your clients an exit strategy? How does somebody buy a diamond from a firm and never be able to sell it through that firm? So what we did is we built the secondary market. That's why we've been on Bloomberg 4 times in the last year on television, because of our auction business, because we were the ones that went out and built the secondary market. And we don't sell other companies' diamonds because we guarantee everything that we sell, and I cannot guarantee, a diamond that another company bought or where they got it from or what they did with it or what it really is. So, again, we bring everything to the table for our clients. We bring you the actual physical diamond that we ship directly to you. On top of that, because the Canadian dollar has dropped by 15%, and I've traded currencies for most of my career, and we do a lot of business in Canada, so we had to hedge the Canadian-American dollar. And as the Canadian-American dollar keeps spreading where the Canadian dollar is falling further and further, what we were fortunate enough to do is to have made enough money on our hedge to be able to allow our clients to buy diamonds in Canadian dollars as opposed to U.S. dollars. So not only do we give you an excellent price on your diamond, but on top of that, we're going to allow you to pay in Canadian dollars, which will save you another 16%. And when we sell your diamond, we only profit if you profit. When we sell your diamonds for you 5, 10, 15 years down the road, we get 10% of the profit, you get all the rest. If you buy an Argyle pink diamond, which are the diamonds that will more than likely over the short term go up more than any other diamond, because the Argyle mine in Western Australia, the East Kimberley district of Western Australia, they produce 95% of the pink diamonds in the world. And basically, the mine is getting ready to close. It'll close before 2020, which is only 5 years from now. It's very likely that pink diamonds will increase 500 to 1,000% during that particular period of time. The closer we get to the mine closing, the more and more these diamonds go up in value, and they're becoming extremely difficult to get. So that's what we bring to the table. We bring to you the finest investment quality diamonds, and where we do carry diamonds that start at 20,000 and go up to as high as 40 to 50 million, the majority of our clients buy diamonds in the 100,000, 50,000, 20,000 range. Our clients are everyday hard-working families that just want to do well. They're concerned about keeping the money in the stock market because it's so volatile and risky. They don't want to keep the money in the bank because you're only getting 2% return. But a diamond that can give you 15 or 20 or 25% return and never decline in value is something that should be in your portfolio. If you're one of the fortunate few to ever get a chance to own a yellow flawless diamond or an argyle pink diamond, that's where most of the money is going to be made. Blue diamonds have gone up over 1,000% in the last 10 years, and the fact is that they will continue to do so because there's so few of them available. In fact, the more currencies get debased, the more that we see what's happening with the ruble and with the Venezuelan currency and the Japanese currency, the yen, and all other currencies are getting beaten up at this point. It makes so much more sense to have some of your money sitting in an asset like a colored diamond because they never decline in value. They go up substantially over time, but it's portable private wealth. Nobody knows that you own it. And it has other tremendous benefits because they could be sold in other currencies, and we can do that for you. We hold international auctions. In fact, I was with some people this week that not only are throwing a 3-day classic car event, mostly with older Ferraris, Dino Ferraris and those type of cars that sell in the hundreds of thousands to millions of dollars, is doing a classic car auction with my company, H. Siegel Fine Auctions, and then doing a diamond auction. So while the husbands are shopping for $4 and $5 million Ferraris, their wives will be with us buying beautiful diamonds. And a lot of the money goes to the charity. That's the other thing that we do. We use our influence in the market to raise a lot of money for charity. We were at an event last night with Susan G. Komen. It was the men's pink tie event for those of us men that donate a lot of money to that charity, and we donated a pair of earrings, pink argyle diamond earrings that Oprah Winfrey owned. And I got one of the 5 pairs of diamonds that she actually made back in 2011 when she took 100 women to Australia. We sold one of her pendants that cost $7,500 to make. We sold it at auction for $42,000. That's how well our auction site did. Now I donated a pair of pink argyle diamond earrings for the charity event coming up, which is the perfect pink party in January, and we'll get a tremendous amount of press from it, but we'll donate about $75,000 to the charity because that's how much these diamond earrings are worth. In fact, there was a whole write-up by Oprah on these earrings, how rare and beautiful they are, and I was just very fortunate to end up with one of the pairs of earrings. I donated it to the charity because I believe that Susan G. Komen will be able to get about $75,000 for these earrings. And just so you know, I paid for these earrings back when I got them 3 years ago. I paid in the range of about $15,000. That's how much these pink diamond earrings are going up. And anything to do with argyle, anything to do with pink diamonds are on fire. In fact, what's happening in pink diamonds is almost unprecedented. Since 2000, argyle pink diamonds have tripled in value. Tripled in value. There's no other investment that has done that. On top of that, fancy light pink diamonds, they don't even have to be argyles, have gone up 20% a year for the last 5 years. That means if you bought a fancy pink diamond, you've doubled your money in the last 5 years. You can't do that with almost any other investment without taking a huge amount of risk. And the other thing is that pink diamonds in general, now, pink diamonds can be faint pink, and they could be very inexpensive. So when they take the entire market of pink diamonds, and what they did is they calculated that back in 2002, the average price for a pink diamond was $17,000 a carat. Now it's $78,000 a carat. That's how much these diamonds are going up. And by the way, that is nothing compared to what's going to happen in the next 5 years. The next 5 years, we will see an increase in pink diamonds that defies description, and we'll see bigger returns than any other market in existence today. And we'll never, ever get another chance to do this because there's no other mine in existence that does what the Argyle mine does, produce 95% of the pink diamonds in the world. It's only about 200 carats a year. It's a tiny little market. If you take the entire supply of pink diamonds from the Argyle mine and pour it into a champagne flute, it doesn't even fill the entire champagne flute. That's how small this market is. However, they're the most concentrated form of wealth in the world today, and articles are being written on them every single week. At auction with Creases and Sotheby's, they're selling for fortunes. So is jewelry. There was an article that came out in the Wall Street Journal a week ago that we sent out to several clients. If you want to see it, we'll send it to you. But it's all about diamond jewelry, colored diamond jewelry that is skyrocketing in price. When you look at our catalog, through my partners, Diamante Atelier in West Palm Beach, you're going to see colored diamonds that defy description. Not only are they beautiful, something you definitely want to give to your wife and to your family, but on top of that, they're phenomenal investments. They go up tremendously in value. What you could literally do is buy a colored diamond ring from us or earrings or whatever, let your wife enjoy them for 5 or 10 years, then give them back to us to sell for you. We'll take 10% of the profit, and you take all the rest. So, again, we brought to you a diamond market that never, ever existed before. Never existed before. There was never a secondary market for smaller diamonds, and that's where my clients buy. So, again, we're very excited about this market. We brought it to you going on 10 years ago, and it's done everything that we've asked and more, and the biggest returns are coming, and it is the best time to get into this market. If you're concerned about what's happening in the stock market and you have stocks in this volatile market, take some of your money out of the market and put it into a rare colored diamond. Believe me, you will not be disappointed with the beauty of these assets and the returns. So what you can do is you can call us or email us and request our catalog, and we will email that catalog to you free of charge, and you will see some of the most beautiful diamonds you've ever seen in your lifetime. No obligation whatsoever. If it's for you, we want to talk to you about investing in diamonds. If it's not something for you, just simply enjoy the catalog and see the beautiful, gorgeous diamonds and how beautifully they're set. This is the best catalog that we've ever put out, and I'm just ecstatic, Randy, for what is developing in the rare colored diamond market. Please don't be fooled by all the companies out there that have just popped up in this marketplace. We've been in business a long time. My partners have been in the business for over 3 generations. And on top of being able to offer you extremely rare colored diamonds, you can also invest with us in our rough diamond business, which we've had for 3 generations now. All I did was modernized it and allowed my clients to invest in it, and they're getting 24% of return. And what we did is that we solidified the investment by putting up, if we raised $25 million, I put up $25 million worth of diamonds into the trust with the attorneys, and that basically protects my clients' equity. So it's one of the great companies that we've started. Our clients are ecstatic because not only does it give a high rate of return, but on top of that, it's in U.S. dollars. I mean, when you convert it back to Canadian, you're picking up another 16%. So on top of the 24% that we're paying you to be our partners in diamond mining, on top of that, it's in American money, and you're picking up another 16%. It's a beautiful thing.
And I would really encourage everyone to get this catalog, a holiday catalog full of diamonds. And it is absolutely stunning. I'm going through it right now on my smartphone. And some of the diamonds that I'm seeing here, pink diamonds, yellow diamonds, green diamonds, some of the most beautiful rings I think I have ever seen. They are absolutely stunning. Speak with Harold about getting our holiday catalog, rarecoloreddiamonds.com, rarecoloreddiamonds.com, or call 1-800-432-1022. Our featured diamond of the week is a 1.01 carat radiant cut, fancy, yellow, internally flawless. And as Harold was saying, get those articles from our newsletter. We have dazzling returns from the Wall Street Journal, diamonds, timeless gems in a changing world from Bain & Company. And maybe during the holidays, if you have a little time, I would encourage you to watch the interviews that Harold did in 2014 with Fox Business News, Deirdre Bolton. He was on a show called Risk and Reward, and he was also on Bloomberg Television and Radio in 2014. We have those interviews with Carol Massar. So I would encourage you, one of the interviews that I would really say take some time and watch is the Jerry Bovino Show. Harold was on the Jerry Bovino Show in Aspen, Ion Aspen, and it is an outstanding interview. You really get a chance to know and understand Harold and find out what he is all about. A great interview with Jerry Bovino. Connect with Harold at rarecoloreddiamonds.com, rarecoloreddiamonds.com, or call 1-800-432-1022. And Harold, going through this catalog, wow, the diamonds and the rings that we have on offer, some of the most beautiful diamonds and rings I think I have ever seen. Stunning.
Thank you very, very much. A lot of work was done into putting it together. And again, as you said, it's such an advanced field now, and what they can do with lasers and computers and everything is just outstanding. So again, it's available to all of our listeners free of charge. I hope you enjoy it. It's one of the best work that we've ever done. It's through my subsidiary, one of my partners, Diamante Atelier, and I think you're really going to love it. When
you look at this catalog, you can go through it. It's on a PDF file, and I'm just looking at it on my smartphone. And they're featuring some of the world's most beautiful diamonds, yellow diamonds, something you would see in a museum, something that would be maybe used as an engagement ring for a princess. A ring very similar to what Kate would be wearing. It's absolutely gorgeous. So definitely take the time and call Harold at 1-800-432-1022. And connect with him at rarecoloreddiamonds.com to get our holiday catalog. Our featured diamond of the week is a 1.01 carat radiant cut, fancy yellow, internally flawless. And Harold, we're in a world today, and we have approximately about a minute and a half left, where, as we mentioned off the top of the show, in Switzerland, they're actually going to be giving people negative interest rates. We reported that a while back from Spain, where they were basically charging you to keep your money on account. In fact, that was happening in the United States. We had a story about that a few weeks ago in our newsletter. But now it's coming out of Switzerland. They're basically going to charge you to keep your money in the bank. You better believe it, and it's done in Spain, it's done in England, and it soon will be here. So, again, we've talked about this for years, and it's now happening now. A lot of the things that we believe are happening, we've talked about in the past, and they're all starting to come into fruition. So, again, 2015, be very, very cautious. Continue to listen to the show. If you'd like to sit down over the phone and talk about your financial situation and all, if there's any way I can help you, it'd be my pleasure. I'll spend as much time with you as you need. But again, we need to be up on what's happening because there's some tremendous danger in the markets as we speak. RareColoredDiamonds.com. RareColoredDiamonds.com is Harold's website. Telephone number 1-800-432-1022. Harold's auction site is hsfineauctions.com. It's an auction site, and it has become not only just an outstanding auction site for those worldwide to bid on and invest in the world's greatest diamonds and jewelry, but it's turned out to be just an outstanding way for charities to raise money, and that will continue in 2015. Harold, this is going to be our last show before Christmas. We will do a show prior to New Year's Eve. We'll be taping that show on the 24th. But we wish everyone a happy holiday and a Merry Christmas. You bet. We certainly do. We wish everybody a really happy holiday season and wish you all the best for the new year. And we will continue to do the shows going into the holidays and again next year. So I wish everybody a very, very happy holiday. I wish everybody a wonderful weekend and a very profitable day. Good luck to our Edmonton Oilers against the Dallas Stars. The pregame show is next. Connect with Harold at rarecoloreddiamonds.com or 1-800-432-1022. That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.